Welcome everybody. It's your boy the Fat Stacks for this week review in the stock market. Hopefully everybody has had a good week. Hopefully you guys have had a good weekend. So there's been a lot of movement going on into the stock market, ranging from obviously the meme stocks, GameStop, AMC, and also cryptocurrency. We're going to be talking about various things that went on this week and my opinion about going forward when it deals with, and I have my notes right here. We're going to be talking about the lumber prices, the chip shortage, interest rates, inflation, and what's going to happen going forward. Hopefully you guys enjoy this video. Don't forget to hit the like button, subscribe, check out all the videos that I do when it comes to the financials and my opinions on the market. Now let's get started. As you can see, the market, it's as they sit right now at the end of Friday. The S&P at over 4,200, the Dow over 3,400, and the Nasdaq up 1,400. So, and of course the next thing we're gonna jump into are these lumber prices. As you can see, a lot of these from the different sites that I went to, you guys can do the same thing. So, but as you can see, the lumber futures posted their biggest ever weekly loss, extending a tumble from all-time highs reaching last month as sawmills ramp up output and buyers hold off on purchase. Now, if you guys don't know, you guys have seen how the housing prices have shot up and how the price of lumber has gone up, meaning that these builders are putting the price and moving the price onto the consumers. So you see the housing prices just shoot up everywhere, and the cost of building a home is shot up as well. So to read a little more, prices in Chicago fell 18% this week, the biggest decline for most active futures in records going back to 1986. Lumber has now dropped almost 40% from the record high reached at on May 10th. So, which is a good, which is a good thing, because some of these, like I said, I myself, when it comes to purchasing a home or looking to build a home, buying into a market like this is crazy, because now you're talking about between $10,000 to $30,000 markup, maybe more, depending on where you're trying to build and what you're trying to build. So it also says that sawmills appear to be catching up on the rampant home building demand in North America that fueled a months-long rally, bringing some relief to a market beset by supply shortages and price surges. Buyers are balking at still historically elevated prices and awaiting additional supplies, setting off a cascading sell-off. So you're gonna have people waiting until basically things cool down before they jump into buying homes or building homes once the supply catches up. So, and a caveat that comes with that we are also going to talk about is we're going to talk about how the interest rates and inflation affect also these prices. So, all right, next item that we're going to jump into is the chip shortage. And a lot of you know that there's been a lot of things that affect these chip shortages, aka auto, gaming consoles, PC building, a lot of things that we use chips for. There's been a big slowdown because of the shortage. And as we see here, the world has been grappling with a chip shortage that has hit the production of household electronics, including everything from toasters to washing machines. It is also expected to cost the global auto industry 110 billion in revenue in 2021. The firm expects the largest impact to car productions to hit second quarter before progressively getting better during the second half of the year and into 2022. Dan Hirsch, a managing director of AlixPartners Automotive and Industrial Practice, previously told CNBC. So, with the chip shortage everywhere, I don't know if you guys know, but I believe Intel is the one that's building two facilities in Arizona, if I'm not mistaken. So United States is trying to do their part so that they don't have to rely on chips from overseas, because if there are constraints overseas, then there's going to be constraints here. So it will be interesting to see what the chip companies here do in order to help relieve some of that supply congestion when it comes to the chips. So which means certain stocks are going to benefit from these moves. So I would definitely look out for, if you're looking in the semiconductor and chips, aka Taiwan Semi, I believe, Intel, Nvidia has been doing great. One of the great stories when it comes to uh, chips and everything. So those are just a few. You have, I believe, Marvell as well, Micron, I believe. So, if you're looking to play that semiconductor chip space, make sure, you pay attention to what's going on in news, because you definitely want to try to get in before things start ramping up. You know what I mean? So the next thing that we're going to looking at is, when will the Feds raise interest rates? Now, we all know right now, due to what's happening out there in the world, interest rates have been cut low so that the economy doesn't end up in a worse position. When the Fed started, buying back, these bonds, well, buying, debt, and as well, they are trying to make sure that the economy does not slow or go into any kind of very deep recession. And we are going to look, it says, it was like an emergency responder rushing to the scene of an accident. The Federal Reserve took less than 2 weeks to slash interest rates to zero and unveiled its largest bond buying program in history, when the first bulldozed into the economy. But a financial system that's now recovering at a rapid clip is in no way lessening the burden of the U.S. central bank's job, steering the world's largest economy out of recession, but away from overheating, and determining how much you pay to borrow and how much you're paid to save. The Fed at this point is expecting to keep borrowing costs at rock bottom for at least 2 more years. Yet experts say Fed's goal of reviving the outbreak ravaged economy will only get harder from here, as inflation paranoia mounts and fears of too hot economy reverberate all the way to the room where monetary policy is set. Now, when it comes to interest rates, we all know interest rates and inflation, yeah, those two cousins need to meet up, as so to speak, when it comes to having a good balance between inflation and interest rates. Because obviously, if inflation is gonna run hot, interest rates have to come up to balance it out, and vice versa. So, but with the economy the way it is, and which we are going to look in the next segment here, there is a disconnect with what's happening in the markets and what's going on out here in the real world. So I won't say real world, but what's going out in the world. And as we see here, there is a giant disconnect between Main Street and Wall Street when it comes to inflation. Something's got to give. The U.S. government reported last week consumer prices, excluding food and energy, rose at their fastest since 1992. So food prices are also surging. Wages, and I'm just skipping, I'm only reading certain things here and there. Wages are rising too, especially for workers in retail, leisure, and hospitality sectors that are returning to jobs as the economy reopens. That adds to inflationary pressures, because some companies will choose to hike prices in order to maintain profits. Labor shortages aren't helping. Okay, so we have all these factors with inflation, and as you heard, interest rates earlier. So obviously, there is going to be, when it comes to labor shortages, you have some people that are saying, well, they are knowing their worth, they're switching their jobs, they're not really jumping into just any job, because depending on, you have the whole stay home factor, you have the unemployment factor, you have, well, still with going on health wise in the world, you have that factor. So you have a lot of companies that might be changing the way how people go back to work, go back into the office. So now you're going to have people looking for, well, what's more flexible for me, since people are so used to doing the stay at home remote work. So now companies are like, well, we want people to come back to the office, and people are like, oh no, and the jobs aren't filling up as quickly as possible. Obviously, a lot of the labor shortage is going into the service, retail, in that area. So it's one of those things where it's going to be a tug and pull one way or the next. But one thing is for sure, if, as you saw, if the feds aren't going to raise interest rates for another couple years and this inflationary pressure keeps going higher, there's going to have to be some type of talk of taper eventually, because as you can see, they said between Main Street and Wall Street, there is a disconnect there. And I am telling you, what happens is when you have stocks in the stock market that don't really reflect what's going on in the real world, sometimes certain things catch up, and then sometimes the stock market gets hit. So having that, what they call a barbell approach, make sure that you have, not just all your money in one area, but have it spread out, because you have the talk between growth and value. And right now you have a lot of analysis and investors looking at value. A lot of the growth stocks have definitely dropped between 20 to 40%. So that also gives opportunity for people to buy in. So make sure that when you're investing and you're looking at, well, what do I want to invest into? Make sure you have what they call that barbell approach. Make sure you have, because you want to make sure that if the market goes down, something is always going to go up and down. You know what I mean? So you want to make sure your portfolio is well balanced and well prepared to handle eventually when the interest rates do go up. And last but not least, we're going to talk about crypto. And one thing about crypto right now is crypto is the hottest thing since sliced bread right now, because people are wondering, will crypto ever make it into the ETFs? And Bitcoin has definitely gone down from hitting what 60, it hit 60K, like what is it, a few back when. So, and ever since then it's dropped pretty severely. Crypto has dropped somewhat. And also, it also gives a buying in opportunity for those who are looking to invest in crypto. But what I'm looking forward to when it comes to crypto is if the SEC will allow, well, Bitcoin into the ETFs. And if that does happen, watch it, because that is going to send crypto going up if it ever gets approved, or when, because that's right now, that is the key. When will they let these companies have Bitcoin in their ETFs? And as you can see, the new SEC chairman, Gary Gensler, sat down in an interview with CNBC Squawk Box, in which sounded several alarming bells about safety concerns with crypto markets. I will let you guys look that up for yourselves. And as we scroll down, of course, greater investor protection is just one, and should open-end funds invest in Bitcoin futures. Just a couple of samples I wanted to show you guys with what's going on. And that's really what I'm looking forward to when it comes to crypto being in ETFs. And like I said, once that happens, I think crypto is going to go higher, because you have some people that are, using crypto as how you have gold, using it as a hedge. So, but that is the video for today. Hopefully you guys enjoyed the video. Appreciate you guys coming through. Don't forget, make sure you hit the like button, hit that subscribe. I'll try to put out videos when I can. So you guys enjoy your Sunday. Be safe.